Good turnaround Tuesday, Warriors. How's everyone doing today? Hello, Ingmar, Steve, Blake, how are you? Andrew, Mike, Kman, how are you? Hugo, how you, Ryan? Brand, how are you? Okay, so hey, Will, Rob. So I want to go to Ryan, talk about the UK budget, I believe was released, correct?
Nope, tomorrow.
Okay, so I'm going to go to you anyway. Yeah, anyway, we're trying again at this 15 and a half level, buddy. Feels like it wants a relief, like, like the market had a relief rally and the metals had a relief rally. Maybe it's the currency's turn.
It's possible we keep knocking on the door and those lows just creep up a little bit. So yeah, it's I think I've been stopped on my short. I was short in the 30s. I'll tell you what, I could have traded it 100 times between 115 and 115.50 and made the money, but I've just been knocked out my short. But yeah, it hasn't held the break. It's had a little nose, but yeah, maybe it's going to have a little push up. Maybe you've moved to 116, but it's not going anywhere fast. Volatility has dropped. The 1 month at the money's at 5.5%, which is
New
getting into
lows.
low territory.
Yeah, new lows for this regime of low volatility. Cable, I don't know, I wouldn't short this.
Not
Even,
today.
who knows what would happen tomorrow with the budget, but
Yeah.
it's not,
And
this is not a
speaking of
setup I
vol,
short. Huh?
yeah, speaking of vol, there's been a bit of a pickup in volatility in pound assets, UK assets across the board because of the budget market now getting a bit antsy and repositioning, de-risking, whatever you want to call it. So the pound could be a little bit jumpy over the next few hours until we get to that budget.
What do you think of EG? Are we topping here? Is this
No,
some type of head and shoulders or distribution? What do you think?
no, I think we are just purely in wait and see. There's a fairly decent risk that I was saying this on the flow show. You've got to trade if you're trading the budget. You've got to trade this in two parts. The first part is what the bond market thinks of fiscal responsibility. If it thinks the chancellor's being responsible, then you're going to see yields come down and the pound will go up. If the market doesn't like that, then yields are going to go up and the pound's going to crumble. Then after that, everyone's going to look at, well, what do all these measures mean for the economy? And if they don't like that part, and that's the longer term part, then any positivity you get from the fiscal side is going to evaporate in the long term picture. So there's two ways to trade it. We could get this, if it's bad news in this budget, we could be up at 89 or going through 89 in euro sterling. If we get a decent dip in that, I'm going to be looking to buy it because I think longer term, the pain is coming.
Okay. One guess of an outcome is, ABC for A, ABC for B, and now we're going to have a C wave, maybe back to 2.5.
Yeah, could
I'm a
do.
seller. I'm a seller there if it gets there.
Yeah,
So,
that'd be sensible. If we're up there, because as I say, if the market likes the financial responsibility side, we're probably up there. And then what comes after?
okay, buddy. Thank you, Ryan.
Pleasure, mate.
All right. Good morning, K-Man.
Good morning, Mr. Dale. Good morning, everybody.
So are the JGB yields dropping again today?
No, absolute. No, the yields are actually at fresh highs on the.
Wow.
Okay, no, not at fresh highs. Yesterday we were a little bit higher. No, and
Okay.
but we're still at 180, which is still
Yeah.
pretty lofty on in the 10-year. No, but there's a bit of a change of change of feel to the yen, and we were discussing that this morning also on the Flow Show. It's got a bit of an issue to stay above 157, but also even though still at very lofty levels, of course, the yen crosses are also a little bit lower. We had a bit of a new warning from this time the growth minister in Japan, Kyuchi, saying talking about one-sided moves, and also actually talking about speculative moves, watching with a sense of urgency. So that already weighed on it. But there's a lot of packages coming in, and perhaps the market is just thinking that those packages may help. Something which was touted already a few weeks ago. Takeichi said that she will invest 1 trillion yen into small and medium-sized businesses to keep wages high. So that's another positive. Should be another reason for that the Bank of Japan could continue to hike, although at a snail's pace, as we know. But they said just that little bit of a change of feel to the yen right now.
Yeah. You know, my work says that this is not the high, but
No, I mean I'm not trading it as such.
yeah,
Um, I'm not trading it for
like we're
now.
getting a little
I mean, the cap just above 157. Now you had a level there, and it capped right there. So it's yeah, it's interesting. Interesting.
yeah, I
Uh, we
mean,
just had we just had, in case people missed it, we just had some CNN, ABC came up with articles saying that apart from some details, the key points to a peace deal in Ukraine maybe on the table. Now, nothing is signed yet. There's still those Europe just produced some of their findings and maybe things to change in there. But those two seem to be saying that U.S. officials have said that the peace deal is really close. So the market is a little bit moving there. Risk is liking it, but the moves are still subdued, right?
hmm, okay. I guess
Uh,
the issue now is with the revised plan,
wow, but
will
the thing
Putin
is,
reject it? Huh?
I can't imagine. I mean, I don't know those red lines about on both sides of the deal. Let's say Ukraine and Russia. Russia wants to keep the gained territory and maybe even more, but Ukraine is normally completely opposed to it. And then we have the number of forces, admittance of Ukraine to NATO or EU. That this those are also Russian red lines, but I don't know. Yesterday, this Trump Xi call, perhaps Xi called Putin afterwards to calm him down a bit. I don't know. Never say never, of course.
Right.
But I still want to see this thing signed, before really saying that we're there.
Okay.
But the
I
market
saw a
reacts.
video that, Russia needs this deal. It's not getting the same kind of press as, being Ukraine being portrayed as desperately needing the deal. But I read about Putin sending in his crack troops, their rifle, their famous divisions. And I
Mm,
believe the city's pronounced Progrovs. And they just sent, they were using human waves
mm,
and they lost, I don't know, a couple 100,000 troops in a month.
yeah. But
So,
where are those troops coming from? Because there's some Koreans there, North Koreans there, there's some Africans there. And whose troops are there? I don't know about
it was
all.
supposed to be like their version of the SEALs and,
Mm,
special forces and, maybe like Easy Company was
mm,
for the
mm,
US in World War II, just, the cream of the crop. And
mm.
they came in on motorcycles. And
Oh yeah, I saw that somewhere.
yeah,
But
and,
yeah,
to try and disguise their
but
moves.
yeah, I mean the thing is, will the deal fly? And we know that Trump is dying to get a peace deal for Thanksgiving. And as I said, maybe she whispered to Putin's ear, and maybe they're going to find an agreement. But it would be a bit of a strange agreement. We're not going to spend the whole show on it, but strange agreement because those areas that Russia is now controlling are the richest in minerals that Ukraine has. So I mean, it would be like a huge thing to give it up, you know.
Yeah.
I don't know if it will fly, but anyway,
Yeah.
uh,
Anyway, so we'll get back to the markets.
yeah. Besson
Yeah.
is
So
actually Besson
go
is
ahead.
actually saying that he will have a last interview in the second round for the next Fed head as well. So there's a few headlines dropping while we're talking here.
Okay. Well, it looks like the dollar is breaking down now, this little mini
Mm,
formation here. Just one. I see two scenarios. Either, we're just going to pull back to correct last week's move, maybe around here.
yeah.
But if we get through here, I could actually see 98 happening again, something
Mm,
like this from here.
yeah.
So that's kind of the way it looks. And I guess a peace deal would make, be supportive of Euro, right?
Yeah, support should be supportive for the euro. Should be supportive somewhere for risk. Those are normally two things. If they correlate, that should weigh a little bit on the dollar in theory. Yeah, I mean it could be, but let's not forget we also have like Thanksgiving this week and
Yeah.
month-end flows, etc. I feel a bit of a messy second part of the week coming, I must say.
Yeah, I'm sure. The big money's on vacation, aren't they?
Um, I don't know. I don't know.
Besides our big money.
Yeah, I don't know.
But call
What,
could call
what's
up.
interesting? What's interesting is that yields are coming down
Yeah.
in the US.
Yep.
That's really interesting.
Yeah,
Hey,
that is.
good morning,
Yeah.
guys.
Hey,
Kman, what are you reading as far as flows like corporate month-end flows? They reported as dollar buying flows coming in.
Yeah, well, that's what it's supposed to be. I saw a couple of models calling for dollar buying, but again, they've been wrong in the past months. I think there's a lot of dynamic hedging going on, and maybe I'm not going to completely bank on it. I'd just say I wouldn't be surprised if they buy dollars, but will it be today or tomorrow? That's another question. Yeah, seems like now today the market on right now the market is trying to make sense of this deal or not coming through. Yeah, but it should be buying, but okay, we will see.
okay. Uh, Blake, let's want to talk risk. So S&Ps, we got through the um, uptrend line that was broken yesterday. I don't know, is this about halfway back here? And 68 is 61.8. And do you think that, getting back inside this channel, I guess it depends how thick your pen is positive, at least for the short term?
Yeah, it is for the short term. We bounce back to, I mean, we're just off of the 618 retracement of the last drop. We're getting close. We're actually hitting the descending trend line. You can actually draw a trend line across the top of those lines that we were looking at that yesterday, thinking we're going to get here today, and we are right now. So whether we can surpass that or not, again, as these guys are, just saying, the market's trying to consume what we are just receiving as of the last few minutes, over the last, less than an hour, between what's happening with Russia and Ukraine, and the first indication we saw is crude oil just fell out of bed. We knew
Yeah, I
some sort
just
of
saw that.
headline was coming, and then as soon as that happened, that we realized that there was a Russia-Ukraine peace deal. Whether Russia, agrees to it or not, it looks like Ukraine's agreed to most of it, and whether Russia, goes along with it. Something that we were talking about last or yesterday, and I was talking to our traders in our private shows, was we're going to get some sort of peace deal. These guys are tired. Russia and Ukraine, it's just kind of like kind of being like in a boxing match, coach. And the round's over. Everybody's going to go back to the respective corners. They're gonna rebuild inventory. They're going to catch their breath before they go at it again. And I think that's where we're at right now. I don't think
Yes,
a peace deal's lasting.
As far as this WTI is concerned, technically, this to me looks like a stop hunt. Okay, so where we just cleaned out the lows and we're already leaving a tail. If you're what I'm doing is I bought it, pulled out almost a buck yesterday. I'm gonna try it again and risk the lows from early this morning.
I mean, you know where your risk is.
Yeah.
If we break through $55, the last
Oh
place you want to
yeah.
be is long crude. So,
No, I mean
I mean,
you
if
could
you,
risk today's lows. Is how I'm gonna play it, thinking that we might get a reversal 4-hour candle. We'll see. But yeah, S&Ps, you know what, Blake, there was news last week that Trump was going to allow the sale of the lower quality chips from NVIDIA, and the Chinese didn't want them. And I think they're really paying attention to what's happening here in the AI trade, because now there's talk that President Trump may allow China to buy the top of the line chips, which they've been restricted from having access to. So the White House is trying to save NVIDIA here, and it's
well,
not such a great opening either.
yeah, I
Google,
mean, go
Google is
ahead.
putting in some competition, trying to sell some high-end chips. Uh, NVIDIA may have some competition there.
Oh, who's the company?
Google.
Google. Okay. What a chart! It's still parabolic. So I don't. It's blown off again. All right. So, and what about DeepSeek? Maybe they don't want them as much as they did want them before. Here's Google, guys.
Yeah, Google's very, very strong. Hey, a matter of fact, I want to
Go
cover
ahead.
something real quick.
Grab them, buddy.
Yeah, Ryan and Kman were talking about you're right, Dale. Here's the trend line that we were just all looking at
Yeah.
yesterday. We basically got up here 618 retracement just as far as the SPOOs go. So it's going to be really
Yeah.
interesting to see what the market does today. Ryan, you said something on the Flow Show this morning. If you guys don't listen to the Flow Show, make sure you do. It's a great way to get caught up, especially if you live in the U.S. Or North America, and you get up when during these times, and you want to get caught up with what's happening with Europe. Ryan, you were saying your bias is for yen strength as of right now. Why is that? And by the way, the dollar yen is hitting lows as we speak.
Yeah, I've just taken there to take a little slice off my short. Yeah,
Good.
just the news out. Once we got that number from Takaichi of the fiscal plan, that was the surprise out the way. You know, people had had a range of what it was going to be. It wasn't at the top end. It was round about in the middle. So the surprise is done. Then we had more BOJ members stepping into the Hawk side. We've had UEDA coming out and talking positively. The fiscal plans are seemingly going to be responsible, not let's just throw a kitchen sink at it.
Yeah.
And I think that's caused a bit of a top for yen pairs. And yeah, so I'm expecting that any major yen weakness is going to be a bit hard to come by unless something happens. So yeah, we could be in a little bit of a period of rally selling in yen pairs, and there's some big levels to come in dollar yen. 155 is the major one for me. 157 has had a little poke yesterday, but it's held like a demon today. So that's just further confirmation of
Yeah,
my
I have a
thought.
feeling if we slump back through 156, it's going to be quite bearish. I mean we're there like on a sustained basis. It's
Yeah,
gonna usher in some selling pressure. And remember, guys, it's yen pairs are kind of unique. You could trade the dollar yen as a dollar, but really it's more of the yen pairs. And you got the euro yen that's got this nasty looking, what could be a nasty looking throwover. You got some of the other yen pairs like Canadian yen has rejected channel resistance. a lot of confluence up here, a lot of horizontal resistance that I talked about actually on the trade-off show last week. These big rejections, if they come through and you start seeing yen pairs, you could get yen strength complemented by dollar strength at the same time, which is usually complemented by risk aversion, which isn't happening right at this very moment. But that's just something just to pay attention with. Now, I do want to. For those of you that are looking at this Russia-Ukraine deal, one of the things about the pairs that could really benefit from this is the Euro Swiss. Now, I started buying the Euro Swiss yesterday. If you're not in the chat room, you can look right.
I see it.
Well, that was the Euro Pound. This is yesterday. So this is today, right? November 25th. You go back one day. There's long Euro Swiss at 93.20. Kman's been buying the Euro Swiss since last week, I think. Am I right, Kman? So
91.90.
Yeah, 91.90 down here. So you got a
Sharpshooter.
false breakouts tend to lead to breakouts. False breakdowns tend to lead to breakouts. So when you have a false breakdown like you saw here, we broke through that 92-cent level. I actually tried to short it when we were at 92.10 because I was like, okay, maybe this is going to hold a breakdown. It didn't. It actually continued higher. Now, this is at risk of a much bigger move, especially if Russia and Ukraine do figure something out. I mean, we could literally we're at 93 cents right now. We could literally be trading at 95 cents by, December 1st. Well, I don't know. That's pretty quick, but maybe the first week or two of December, we could be trading up at these levels. And this is not uncharted territory. It's not disrupting the downtrend that we've seen for so long in the Euro Swiss. But I think you guys need to keep an eye on it because you could see a significant squeeze in some of these Swiss pairs. I got asked yesterday, has the Swiss in precious metals been bought because of what's happening in Russia, Ukraine? And I'm like, no, precious metals haven't, but the Swiss has been. And so, when you factor in FX, not owning Swiss francs anymore, you don't need them. The central bank almost is in negative, implementing negative rates. You don't need the safety of the Swiss franc anymore, especially if Russia and Ukraine kind of, have somewhat of a peace deal. So at least for now, near term. So I think you could see the Euro Swiss really, really, pull vault higher. And that's something that I think everybody should be paying attention to, especially if you trade currencies. Ryan, as we go into today, we have a lot going on. We obviously have the UK budget tomorrow. We have producer prices coming up in just a few minutes. By the way, is the PPI data, is that September's data?
Yes. Yeah, it's all catch up data. If we're going to get it, I've lost track of what's coming and what's not coming.
Yeah, we're supposed to have that and retail sales. So I mean, there could be some volatility here here in the next few minutes. What are you paying attention to today?
I'm going to keep an eye on this peace stuff because I've been saying the last few days on the Flow show we're going to probably see European risk on, whether it's a broad risk on across the globe. I think what we're seeing in yields at the moment, particularly have a look at European yields, they're coming down probably on the prospect that they're not going to have to fund sending billions and billions to Ukraine anymore. So yeah, it's how this plays out. We could see Euro getting a bit of a boost here if it's all confirmed. Obviously, we're waiting on the Russians.
All right, Kman, what are you looking at today?
Oh, yeah, I'm long Euro Swiss. I'm long a bit of Euro Canada. If oil continues to trade soft, maybe that's going to help. I was already looking at being short some Canadian dollar, maybe in 2 month end. I don't know. What else? Next, well, this evening for you guys is going to be very interesting because we have a double whammy in the antipodians, right? We have the Australian CPI and the RBNZ. Aussie CPI going to be important because of the reluctance of the RBA to cut. So if we would have a surprise lower CPI, they may change tack. And RBNZ is supposed to cut it will probably cut 25 BPs, but it may be the last one because in this round. So I guess stuff like Aussie Kiwi will be on the move overnight, depending on what the people at RBNZ say and how that Aussie CPI comes out.
That's pretty tight. I mean,
That's
look at
going
how
to
tight
be a big one.
that formation is. So whatever way we break here with that double whammy, for those of you like myself that are in the United States, and that's going to be late in the afternoon. If you're in Asia, it's going to be early in the morning. So yeah, keep an eye on that. That's a good one.
And
I see. Go
and the
ahead.
other thing is I'm keeping a close eye on gold because it's broken out of that little triangle yesterday. We stopped right at the 41.50.60 where I have where we saw previous highs and lows, which is a quite an interesting level. But
The
it's not really
618.
it's yeah, the 618 as well. And but it's not really on the risk bus for the time being. It looks to be more on the yields bus. So if global yields continue to sag a little bit, gold may counterintuitively continue to rise. I don't know, but for the time being, it hasn't broken, so the level is still there. And I took mine off what I bought yesterday, so just respecting that level 41.50.60 relatively important to me.
All right. Thank you. Steve, I'm going to get ready for the data, but you see this Russia-Ukraine news coming in. What's your thought process here? And do you think that is something that peace deal is gonna sustain? Or do you think that it's gonna happen?
I don't know. I'm skeptical, so I'm not. I'm definitely not trading based on that. I'm watching my levels. I'm most importantly watching equities and the dollar. Equities are definitely on the process of potentially going for a deeper corrective move. And that's what I want to see because the technicals are still questionable. I mean, we did break down in the case of the S&P from the ascending channel, and we had some other breaks as well, but I haven't seen follow through yet.
Okay. Yeah, I'm wondering if we haven't heard from Russia yet, so it's going to be really interesting to hear what they have to say about all of these specifics. All right, Steve. Well, thank you very much for your input. I'm going to actually prepare everything. Whoops, I don't know why that came up there.
Steve, thank you once again for your skepticism.
Steve's always skeptical. He's always the most conservative trader out there.
I'm a little skeptical about Steve's skepticism. How about you?
All right, I got the dollar index right over here to the right. I got S&P right in the middle. I think I'm going to put yields up on the left real quick. So everybody seems to be focused on yields this morning. Just let's see if they match the move that we see in the dollar. We do have data coming out, so I'm going to pull this up from Forex Analytix. Guys, if you want all the headlines here, I mean, this is when you see the headlines as they're coming, like when Kman was talking with Dale just a few minutes ago, and you had all these comments from Besant, about new Fed head coming out. It's all happens right here that you can follow it in one location, which is nice. But if you go over to calendar, you can grab the data flash. Let's see how much time we got. We got about 45 seconds. That data should be coming out. We got retail sales, producer prices. We all assume data is coming out, so
it should be. I checked the websites.
Confusing.
It should be.
Okay, all right.
Here
So
we
let's
go.
move this over here, and we got data coming out in just a few minutes. So a few seconds, excuse me. So stand by.
Abracadabra, show us the past.
Yeah. Remember,
Take
dollar
us
to the
back.
right, S&P in the middle, yields to the left. Let's see what we got.
Five seconds.
Here we go.
Slightly soft
Weak.
retails.
Oi.
PPI, they're thereabouts. Nothing for the market to get humpy about. Year-on-year PPI,
Control
a
group
little
a bit
bit
weak.
warm. 2.7 versus 2.6 expected. Core PPI 2.9 versus 2.8 prior. So warm
goes the
inflation
dollar.
numbers there.
All right. And we do see the dollar, slumping a little bit. How old are those retail sales though?
September.
Yeah, I mean,
Jeez, I mean,
it's hard to
it's
react
crazy.
off of this data. And you see yields just turned around. Yields are actually bouncing right now. So to be careful chasing the dollar lower, at this moment. It looked like the euro pushed higher and then it's just kind of giving it back. Dollar CAD pushed, maybe 10 pips lower and, starting to firm up
Algos
again.
jumping around. That's all it is.
Yeah, I don't know if it's worth chasing around at this point. I think we're going to be more on headlines and end of month flows as these guys have been talking about. Remember, the last day of the month actually is Sunday, so you got a lot of flows that are going to be coming in the next couple of days. So just and we got to throw U.S. Thanksgiving holiday on top of it. Speaking of which, and I know you have your interview here, Dale. We will not be broadcasting the F.A.C.E show on Thursday, but Friday, I'm here. Whether Dale, if you want to take the day off, you're more than welcome to. I'll be here for sure. And so we'll broadcast, even though markets are going to be partially open. It's a half day on Friday. I'll still be here. I'll be in front of the computer. I'll be navigating through all this stuff because it is end of month, so we should have some decent volatility. And with lack of liquidity, volatility should still be quite high. So I'll be around, just for everybody's knowledge.
I've already broken my Ironman record, so I don't think anyone will ever break that record.
Okay.
But you know what Ironman is.
Yeah. All right. Cool.
You never miss a game.
Yeah, that's right. Well, we'll see you here then, Dale.
Wow.
If you're up for it. All right,
Okay.
guys. Well, thank you, Ryan. Thank you, Kman, and thanks, Steve. Good to hear your voice, Steve. I'll pass it over to you, Dale, so you can have your interview.
I'm skeptical that was even really Steve. Okay, I'm not
That was
sure.
Russian Steve.
That could have been a hologram or something like that.
That was Russian Steve. He's telling us we're not going to get a deal.
All right. Well, thanks, Blake. Good job. Great looks, and content from Kman and Ryan too. Every day, you learn something new. This is like you're trading Wall Street Journal between what happens on the flow show in here. I don't think you could be any more informed after a couple of hours of this. I don't care, what sites you go to read about things. It's like we're curating everything that's important for the markets that could have impact for you. So anyway, we're a great newspaper in a modern form. Okay, and we're not just reporters, because reporters just talk about what happened after it happens. So you get a little bit more of an edge with us, I believe. And talking about edges, we have Okan Abar with us, live from Turkey. Okan, great to have you. I'm very curious about where your head's at going into year end. Welcome back to F.A.C.E.
Hi, Dale. Do you hear me first? Can I ask?
Yeah,
Okay,
loud and
great.
clear. Loud and
Great,
clear.
great,
Do you
great.
think there's going to be, let's start with this. Do you think there's going to be a peace deal?
I think there's going to be a peace deal, but this is not going to make Ukraine very happy about it
Okay,
because
so there's going to be a capitulation deal.
kind
Why
of.
would they take it?
Well, they have to take it because if they don't take it, I mean, Ukraine's army, strength of the army is based on US. So it depends on the US. So
Okay.
if US cuts the selling of weapons, what they're gonna do. Okay,
The
so
Europeans wouldn't be enough to bridge a gap.
Europeans wouldn't want to mess with Russia at a time like this.
Okay,
Because so for this reason, I think they're gonna, stay back and try to persuade
yeah,
Ukraine to accept the deal.
okay.
You know.
All right, thanks for your opinion. Is that what you're hearing on the ground there in Turkey?
Mm.
What, Erdogan make any comments about it?
Actually, no.
Okay,
He didn't put any comments lately because there are other political things going on in Turkey these days. So that is not
yeah,
on the agenda. So
okay.
so but it's on the world's agenda, of course. So
Currency's still crashing?
which currencies?
Yours, Turkish lira.
Oh, Turkish lira. No, actually it's now strong, very strong.
Wow, okay, that's
Yeah,
a change, huh?
well, when you compare it to the differential of the inflation levels between the US and Turkey, Turkish lira is very strong. It is supposed to be much, much weaker. Currently, it is trading at around 44, 45, against euro. Against dollar, it's trading around 41, 42. That is too strong. It's supposed to be, what is supposed to be something around 70, 75, something like
Huh,
that, because it
okay,
has been kept very strong in the last 2 years on purpose. They've been, managing the float. And for this reason, they kept Turkish lira very strong. The reason why they keep it strong is because they don't want the inflation to pull up because it has political
Can
consequence.
they, are they putting the genie back in the bottle? Are prices starting to drop there? Because what I see on the news, it's not that way. People could barely afford to buy food.
Yeah, they're not. I mean, the food is very expensive for everybody, not only for people living in Turkey, but for tourists as well. Some any person coming out of Istanbul, out of Turkey, comes to Istanbul and they find the food is very expensive.
Okay. All right, so I was going to look at the lira, but let me give you the screen and what's on your mind market-wise.
Okay, I prepared for you um, a
PowerPoint?
a PowerPoint
Oh,
presentation, and I'm sharing it with you.
I see it.
Yeah, you see that? Okay, great.
Yeah.
My topic today, I'm going to talk about the gold silver because I recognize lately that you have been following this very closely.
Yeah.
And so I will talk about gold silver and then I'm going to link it to DXY here. And then I'm going to link it to S&P 500, where the S&P 500 may go in the coming weeks. So let me start with the gold silver.
Yeah.
Okay, on this chart that I'm sharing with you, if you realize that, at the times when gold silver increases, the gold silver's convenience yields increases. I'm following this indicator very closely. If there are people here who don't know much about convenience yield, well, that's the benefit of holding the commodity, the physical commodity, rather than buying it on a forward basis or postponing the purchase. So if you're not postponing the purchase but buying the physical commodity and stocking it, it means that you want that commodity very much.
Right.
So in this case, if this red line, which is the convenience yield, if that is increasing, as you can see, it corresponds to the increases in the gold silver ratio. So there are few examples there are many examples of this. The convenience yield increases, the gold silver increases. The convenience increases from level 0. That's
Mhm.
also important. That level 0 means if there is a benefit of holding the gold against the silver, then it should be above zero. So anytime it goes over zero, you see the gold silver increases. So there are examples of this. Nowadays, looking at the gold silver convenience yields, you see it has been very, very flat for a long time.
Yeah.
But it has been below zero barrier, which means that there is not a benefit of holding gold against silver. There's actually cost of holding gold against silver. But this is going to change because history showed us that, I mean, this kind of long period doesn't last too much, especially after, spending 3 or 4 months time like this. It cannot stay like this. And well, I look at this situation from seasonality point of view, and I'm switching to the next slide
Sure.
of the gold silver ratio. If you look at this the chart, you can see that the ratio is towards the end of the year it goes up slightly, little higher. It goes up. But looking at this year, I mean, this green line is showing us the 5 years average performance of the gold silver. This blue line is showing us this year's 2005 performance.
Right.
If you realize that there are only few times that gold silver has obeyed what the 5-year average is doing. So there's great divergence and convergences here. I think that going forward in the next couple of weeks till the end of this year, I think that this divergence may stop and it should be converging to its mean, its average of 5 years. So this
Okay.
suggests me that the gold silver ratio
Setting
may
higher.
be trading higher. Yes, exactly.
Okay. I know it's not directional. Sometimes it could be. Does that give you any bias as far as direction of metals when gold is leading silver? And does this also have a correlation with the dollar?
Yes,
When XAU goes up, it portends a dollar rally.
exactly. So actually, when gold silver here, right here, gold silver ratio, which is here, is shown on a blue line with the blue line, and
Yeah.
the DXY is shown with the white line. As you
Yeah,
can
look
see,
at
they
that.
are very well correlated with each other. So well correlated with each other. So, but however, if you look back into the last 4 months,
Mhm.
you realize that the gold silver ratio has been trending down while the DXY has been going up. So there is divergence here, which is not cannot be explained by this very correlation.
Is it breaking down the correlation?
Well, there is a divergence here, so the correlation isn't working here right now.
Yeah.
But I think
It'll
going
reconnect.
exactly, I think going back to this convenience yield issue, which I just explained, the convenience yield cannot stay like this for a long time. If it starts trending lower, higher, the convenience yield, then the gold ratio may go up,
Yeah.
and the seasonality might support this as well. In this case, then this the blue line, which is here, might be going higher, which may suggest us that the DXY may be supported towards the end of the year. So I think that in the last month, actually, by the way, dollar is traditionally supported on December because because of the repatriation of the profits that are being transferred to the US. So there is a great demand for dollar. So on a seasonal basis, the dollar is supported anyway. So that's another reason why I
Can I
think
ask you, this is not my wheelhouse, but I figure a guy with a PhD, it might be. There's all the issues we've had in the repo market and the Fed balance sheet and liquidity issues in the plumbing. Do you have a view on that?
you remember the last time we spoke about the Fed's position is that it is really accommodative. Although rates are higher, looking at the financial conditions index, which I've been talking before, um, um, sorry, I mean, US has not been as accommodative as Europe. So it has been, they have been trying to keep the interest rates higher. So when you compare it to Europe, US is not accommodative for economy. So that's why Trump administration is pushing Federal Reserve to drop the interest rates. And I think once the inflation numbers and other numbers that are linked to it start to suggest that inflation may go down, not even if it goes down, but if it is expected to go down,
And
then
it's not getting worse. Yeah.
then the Federal Reserve may start lowering the interest rates. But
Do you have a target in the 10-year when you think this, with all the easing that you see coming, we're going to trade 3.5?
that is too low. That will be
Okay,
too
so
low.
we're at what here now?
Uh,
405.
I think that most of the action we're gonna see on the 2 years rather than the 10 years. So the 2 years might go down rather more than the 10 years, which may
Okay,
steepen the yield curve.
okay,
Because if you are talking about if we are talking about wanting to strengthen the economy in the future, to accommodate for the future, we have to keep the nearby interest rates down rather than the 10 years interest rates.
well, let me ask you this, after an inversion, which I forgot when we uninverted, I don't think we're still inverted. So now, after you have an inversion, this was a pretty deep one, and it's not a trigger. But I saw something that there's been big lags in the past between yield curve inversions and it finally having an impact on markets. And I think it's been a few years since the
I
inversion.
actually have a chart on this, if I may show you.
Oh yeah, you're also a mind reader.
Yes.
My goodness, you're a multi-dimensional guy.
Here it is, Dale.
Yeah,
You see this
yeah,
yellow line? Yes.
yeah.
This yellow line is the time when the yield curve was inverted back in 2022.
Okay,
The
3 years
highest,
already.
yeah, exactly. The highest was on June or August in 2023. That was the highest point.
Yeah,
And then from then we started heading down. Now we are not inverted, we are barely normal. Why?
okay,
Because we're too flat these days. That's the
okay,
reason why the Federal Reserve is going to want not the 10 years, but the 2 years. So they are going to want to
right,
influence the nearby
right.
terms lower.
Okay. Well, that's all they can anyway, unless they get into like what's that, yield curve controls? Is this yield curve control what they're going to do?
Well, this is not controlled. They cannot control the 10 years.
Okay.
That would be too risky. I mean,
Yeah.
why? Because controlling the 10 years means that they bring a lot of volatility for the hedge funds, which Fed doesn't want to
Okay.
do. So that's very, very risky to do. They don't want to do yield curve control. they would simply go with the traditional way, and they will definitely, sooner or later, perhaps after any kind of if the China and US war, I mean, what I mean by war is a
Trade war.
trade war, yeah. And if that ends, which I think may end, because that is to advantage of everybody. And if the Ukraine war ends too, then you might expect the Federal Reserve to keep the interest rates lower very quickly, very, very quickly. They're not going to wait.
Okay.
No.
All right. Interesting. So what's your view on S&Ps then?
Yeah, so going back now, I want to talk about S&P index.
Mhm.
Looking at, okay, since you mentioned about the risks of US, I have a indicator here, which is this red line, if you can see. That is the differential of the 10 years, zero coupon inflation swap rates. That is supposed to be not F. Zero coupon inflation swap rate, ZCIS. Why did I write F? Okay, ZCIS, right? The 10 years minus the 20 years, okay? If this line keeps rising higher, like it has been rising in the couple of months, it has been rising, it means that the risk premium, US risk premium is increasing. What I mean by risk premium is the risks that are not the inflation risk, but other risks, such as the country risk, political risk, price risk,
Credit risk, private credit.
worthiness risk, exactly. So all kinds of risk I'm
Okay.
talking about. The risks that are not associated with the inflation, but of course they are associated with inflation indirectly. But these risks are just called as a risk premia. We call it risk premia or risk premium. So ZCIS differential is a very, very good indicator. And the best thing about it is it's a market-based indicator. So you can make that for yourself just by taking the differential of these rates. And they are available, I believe, on the Federal Reserve database. You can
Look,
find.
you just had a little blip, and look what happened in April. That was the tariff decline. And then it pulled back with the rally to new all-time highs, and now it's turning up again. Am I
Exactly.
saying that correctly?
Yes, exactly. That's
Okay.
right.
Interesting.
And also, if you realize that lately, this persistence, why I call it persistence, because if it is going higher, it means that the expectation that the risk factors for the 10 years is increasing. So if the longer period is increasing, then it means that the persistence is increasing because the 10 years are increasing against the 2 years higher, much more than that. So for this reason, this red line recently has been going up. However, S&P has been going up too, which is not, it is not supposed to go higher because you see, because they move against each other. As the S&P moves higher, this red line moves lower. You see here, it moves lower, and this goes up. And then as you mentioned, from April, when the tariff war began, this red line has started increasing and the market declined. But since then, the market didn't stop. The market only rose while the risk premium was rising. This is not normal. So I think that going forward, because this dollar index I expect it to increase, then it is a threat against S&P's rising any further. Because from this point on, I don't think that S&P can continue to rise while the dollar is rising. So if the dollar is going to rise going into January 2026, then I mean, what is the scenario that can pull S&P even higher than 7,000 points? I don't
Well, could the
see.
dollar pull back to 98 first before it blows off to 103?
Might happen, that might happen, but if it is going to happen, it has to be very quickly. I mean,
Right.
nowadays we are at what, we're at 100.
Yeah.
Yeah, about 100. So maybe 90, maybe 98 handle, late 98 handle or early 99 handle.
Yeah.
And then, well, that I mean, it is supposed to come to that level in the next one or two, and then it can continue higher.
You have
January
upside targets for the Dixie in this
uh,
period you're describing?
103, 104 max,
Okay. Yeah.
maximum.
Okay. So it's still a bear market rally.
Yeah, exactly. Yeah.
Okay. Got it. All right.
So
Great. Good
given
stuff.
so because thank you, because this is dollar strength we're talking about these days.
Yeah.
And I see no reason why a sell-off in the S&P 500 may come.
Yeah. Even your arrow, when you look at that chart, a break to 6K looks like a blip.
Yes, yeah, it might
And
happen.
that's so a correction in this dollar rally is a correction, and this pullback in the S&Ps, even though it could be 10-15% is a correction.
Exactly. Yeah, because from a risk adjusted point of view,
Yeah.
S&P is way too high from risk adjusted point of view. I mean,
Yeah. Wait till next
well,
year.
sorry.
Next year, if we have a melt up, it'll get even more extreme.
Yeah,
Because if
yeah,
this is just a pullback to 6,000 and we're blowing off to new highs, I guess a lot of these numbers will even get more extreme.
yeah, exactly.
All right,
But
buddy. Well, we're kind of near go ahead, show this last one here.
oh,
Go
sure.
ahead. Go
Very quickly, very quickly. I'm going to talk about the crude oil.
Okay.
I am looking at this 2 year to 10 year, well, the yield curve. Yeah.
Yeah.
Okay, I am comparing the yield curve with the convenience yield
Mm,
of the crude oil. You see, when the convenience yield was here
yeah.
at its lowest,
Yeah.
the spread was, I mean, the yield curve was inverted, which means that the economy was strong back then, but expected to weaken. Now, today, um, this convenience yield is exactly the same level, but today the yield curve is just the opposite. The yield curve today is telling us that economy today is weakening. However, it is expected to strengthen. So in looking at this scenario and compare with what the crude oil has been doing, you see, in this scenario, crude oil has been trending down. In the next scenario, that is current scenario, I think that the crude oil may start to go higher, at least about 6 to 7%, uh, because I mean this $58 is
So
not
back to
is
about 64 is a
yeah,
technical level.
yes, exactly. About 64, 65, that is very possible. I'm not going to be
Come on,
surprised.
bet the farm, man. Put on
Sorry?
1,000 futures contracts right now. And put your stop under the low today.
I will put 1,000 contracts if I had $10 million, maybe.
All right. Well, great to talk to you towards year end, Okan. Best place for people to follow your very interesting, indicator. I haven't heard anyone talk about the convenience factor of holding physical commodities. So you definitely are a market thinker. So how would people go about keeping in touch with you and your work?
They can contact me over X and also LinkedIn. I'll be more than happy to answer their questions if they
Okay.
have. I will be more than happy to help anyone who wants to contact me.
Okay, and Okan's handle on X is his name, Okan Abar. And it's definitely worth the time to see what he's seen under the hood of the market, because I've seen some pretty good forecasts out of Okan. And I want to thank you for, coming here. How long have we been doing this now, buddy?
This presentation
Yeah,
issue
talking to each
for
other.
4 years, no, 3 years.
Okay. All right. Well, I want to thank you for coming here every quarter and edifying the F.A.C.E community.
I thank you, Dale. Thank you very much for giving me this opportunity.
All right. Well, trade well. I hope you have a great close to 2025, and we'll catch up next year.
Sure. More than happy.
Okan, all right, Okan Abar, everybody. You learned something new about when people take delivery on physical commodities and what the implications are, and some pretty good things to think about with the gold silver ratio, the dollar, and the 2 and 10. So again, thanks again, Okan, and everyone. Don't just count your oil barrels or your treasury spreads. Count your blessings. And we'll see everyone tomorrow. Adios, and thanks again, Okan.
Thank you, Dale.
All right.
Have a great year end.
Thank you, man. And there people are thanking you. All right, everyone. Adios till tomorrow. See you then. Oh, join the team in 14 minutes on the morning edge and sharpen yours. See you later.